Thanks to the SACC for giving me this opportunity, and thank you to the audience for tuning in. I really appreciate it. So just to give you a little background on myself, I have spent the last 20 years in management for several Fortune 500 companies. But as far as crypto goes, I discovered it in 2017. I had heard about Bitcoin, and I thought maybe I was too late to Bitcoin when I first heard about it. So I invested in something called Litecoin, and it went up, doubled and tripled in less than a couple of months. And I said to myself, what is this? And decided to start doing a lot more research. And I've been doing crypto every day for the last 4 years, everything from decentralized finance to home mining, educational groups and services. And so I put together a set of slides and am happy to take your questions at the end. So we'll get started. So in order to really understand what cryptocurrency is, you have to kind of go back to the abstract construct of what physical money is, because that's what we're all used to, physical money and of course digital money. So money is the dollar is the physical representation of value. So if I were to say do 10 hours worth of work for someone, they could write it down on a piece of paper, and then the dollar, the physical dollar, is the actual physical representation of that labor or value transaction that's taking place. So, everybody always asks what the dollar is backed by, and what you find out is the answer to that usually is the full faith and credit of the U.S. government. So one thing that a lot of people don't know about the monetary system is that it is controlled by a centralized bank called the Federal Reserve. The Federal Reserve is not ran by the government. It is an institution that is private, and it uses fractional reserve banking system. So we outsourced our money printing to a third party in 1912. So in a fractional reserve banking system, the money is created through the expansion of debt. So as you can see in the chart here, this is the money supply, and especially in the last couple of years, it's expanded greatly. So a lot of times when you hear about inflation, up so much as you are losing your buying power in your dollar or whatever currency that you're using. So relative to the dollar, for instance, Bitcoin is going up dramatically because there's a lot of investment money going into it, but also because the dollar is rapidly losing its buying power. And for instance, everybody knows how rarity works and how supply and demand works. So the same thing applies to money. And for some people, that's a very hard concept to grasp, because we've been raised up in it, and the money supply has always been sort of issued and monopolized by the same institution, which is the Federal Reserve. So, but it works the same way as, say, having a rare baseball card that there's only one of is going to be much more valuable than having something, say, that there is 1,000 issues of a particular baseball card. The same thing happens with the money supply. Every time large amounts of cash are injected into the economy, it robs the dollar of buying power. So it's almost like a hidden tax. So on to the next slide. So what is cryptocurrency? Cryptocurrency is a digital ledger So it's the same thing like we were talking about, where you're writing down, keeping track, bookkeeping. But it does not require any intermediary, and it operates autonomously on its own. So it doesn't require a centralized system. It also has a fixed supply in most cases. But if we're talking about Bitcoin, it definitely is a fixed supply. It was created in 2009 by an anonymous creator who goes by the name of Satoshi Nakamoto. And to this day, nobody knows exactly who he is, but there are currently court cases involving people that claim to be Satoshi Nakamoto. But I do believe that we may never know, because when you are creating something that is disrupting the financial system and sector, it definitely is going to put you at risk in a lot of different terms. So, but a lot of people that I hear that learn about cryptocurrency usually have a very negative connotation to it because they don't understand what it is. And I think people fear more things that they don't understand than things maybe that they don't like, or just because there's that uncertainty principle. And one thing that I hear most often about cryptocurrency is, what is it backed by? It's not backed by anything. Well, the United States dollar is backed by expanding debt. That's what the full faith and credit of the United States is. So now when people say, what is cryptocurrency backed by? I like to say it's backed by energy. So this goes back to the abstract concept of what money is. So we're extracting value through expanding debt right now with the US dollar. But when it comes to cryptocurrency, it is something that is driving our economy. It's something that is tangible. And what it is it's mining, code, and people. So when we talk about blockchain, a blockchain is a digital ledger that is a series of transactions. And you have two different types of mining systems. And what mining is how the system becomes decentralized and processes transactions. So what happens is, on the left, you have a bunch of graphic processing units. These are the graphics cards that you would find in any computer, especially gamers' computers. And what's happening, and it's been happening since 2009, are people are taking these graphics cards and they are hooking up to a blockchain and they are processing transactions at home. So versus, you using PayPal or your bank, where you have a centralized institution that is processing these transactions are being processed all over the world by the machines on the left and the ones on the right. And I'll get to the ones on the right in just a minute. But what this does is all of these mining machines race to solve an algorithm that solves the block. So every time there is a transaction, it is put into a line, and that line becomes basically a block. And these computers all race to solve that block. So when a computer solves the block and processes those transactions, there is a reward that is given to that miner that owns that machine, and that is how the value is created in the transaction process. So what you have on the left is a GPU miner. On the right is what's called an ASIC miner, and these are going to be your larger scale operations, because what happens is, as more miners come online, the system becomes more difficult and you have to use more power to process these transactions, which is what is on the right. They're called ASIC miners, and that is a large farm. So yeah, how does it work? Well, a developer spins up a blockchain, and what they do is it has very particular rules. It will have, say, of course, a ticker, which in this case is Bitcoin, BTC. It'll have a supply, Depending on the cryptocurrency, the supply could be fixed, the supply could be shrinking, the supply could grow. In Bitcoin's case, it is fixed. And again, mining is the process of processing the transactions in a decentralized way. Millions of people all over the world processing the transactions instead of one centralized system. We also have something called nodes, which is staking, and I'll go over that a little later on. It doesn't use as much energy. Consensus and security. So these are kind of one and the same, where people say, well, how secure is it really? Well, in order for a transaction to be logged in the blockchain, one computer has to solve it, and then all the other computers have to agree that this transaction has been solved. And the only way to breach a blockchain network is to have over 51% of the processing power in the network. So as the network grows, it becomes more secure. And right now, Bitcoin is the safest, most secure transactional value network in the world. So why is all of this even important? Well, we've grown up in this system where there is, either the dollar or another currency, and there hasn't been competing currency. It's been in, the governments and other institutions' best interest to not have competing currency. But competing currency came about because of the inefficiencies of the modern day monetary system. What I mean by that, and of course, some of this is dwindling just because of technology, but centralized banking uses, money printing, right? There's a lot of resources that go into that, especially paper and coins, metals. Then you have your banks, which are brick and mortar institutions. They have managers, employees. They have bills for energy. They have to have security. And again, the money supply is created through debt, not only by the Federal Reserve, but by the banking institutions that loan out the money. So every time you deposit $1,000 into your savings account, that $1,000 isn't really sitting there. It is, again, loaned out to someone else, and they only have to keep a certain amount in reserves. So basically, every time a deposit is made, another loan is made. So that's another way that the debt expands. You have the possibility of human error with a centralized banking system. The possibility of hacking. There's one thing that can be hacked. One node. I like to say that the Federal Reserve is one node. And what I mean by that is, like I was showing you how there are multiple participants in the Bitcoin blockchain through the mining process. Well, you can take down 40% of those miners and the network will still operate without a hiccup. And again, expanding supply. So the wonderful thing about cryptocurrency is anybody can participate in the network. It is the network of the people, and whereas you have things that are private, you've got things that are public. This is a whole new thing. This is a decentralized system. So basically means that everybody owns it and runs it, and nobody owns it and runs it at the same time. It uses energy. Most of the time it has a fixed supply. Most cryptocurrencies are very secure. There are multiple people running them. And the way that you want to think about it is it's technology. So it's programmable money. And again, it was created because of some of these inefficiencies in the modern day monetary system. And the other thing that cryptocurrency allows us to do as a society is it allows us to experiment with monetary monetary systems. There are lots of different cryptocurrencies experimenting with a lot of different what we call tokenomics models, and some of them work better than others. And in my opinion, I think some of them work better than what we're using now. But we will move on to the next one. So a lot of you have probably heard this term, especially when it comes to technology. And one of the reasons why I brought up technology on the last slide is because it is a technology, and this is the adoption S-curve. So the way that this works, and it's worked for computers and almost any major technology that has ever come into fruition that has been successful, is from the time that it goes from 0 to 10% adoption is the same time that it goes from 10 to 90%. So it took Bitcoin about 11 years to go to 10% saturation and use. So now we're kind of in the blast off stage. If this adoption S-curve graph holds up, in the next 11 years, you will see explosive growth in the cryptocurrency realm from 10 to 90%. And of course, you can see with Bitcoin, it's at 25%, but Bitcoin by far has the highest market capitalization. It is the largest cryptocurrency, followed by one called Ethereum, and then Binance and Tether. So I'm going to move on to the next one. Okay, this might blow some of your minds. This is how many cryptocurrencies are currently in existence. Some of them have their own blockchains. Some of them exist on other blockchains. But that number is expanded by about 3,000 just in the last 2.5 months alone. So that gives you an idea of how many monetary experiments there are out there. But it's a very amazing breeding ground for new ideas and new technology. And the reason why this is happening is because teams that are creating, say, online applications, like the stuff that you have on your phone, games, metaverse, what they'll do is they will create a blockchain or a token. They will put that token up for sale, sometimes for future use in their application, or they'll have another tokenomics model. That in turn will fund the team to provide the technology, and that's usually how this gets started and why this is growing so rapidly. So there are lots of different types of coins, of course by name, but also they've expanded into categories to kind of make things a little easier to understand. So a cryptocurrency, for example, Bitcoin, Ethereum, Binance, there's a lot of different cryptocurrencies out there. What a cryptocurrency is, it is the native coin for the blockchain. For example, Ethereum is its own blockchain. Now, Ethereum's main purpose is to be used as a transaction fee, so it's burned like gas. Anytime that you send a transaction to the network, you have to pay a little bit in Ethereum. Right now, people that are very familiar with Ethereum know that that's actually a whole lot right now. The network is very congested. But anyways, you pay Ethereum and a gas fee. Well, that's the cryptocurrency. A token is an asset that is built on top of that blockchain. For example, if you wanted to build the SACC coin on top of Ethereum, you could do that. But that would be considered a token. So that is a cryptocurrency versus a token. Now, there are a lot of different types of tokens based on their use. Some of them, like Bitcoin, are a store of value coin, which means a lot of people are basically putting their money in it in hopes that one day it will be worth more money. And so far, that's held up very well for Bitcoin because a lot of people compare it to gold, and it has a lot of attributes that gold doesn't. It's easier to store. It's very liquidable. It's starting to be accepted at lots of retail outlets. A lot of things that gold does not have. So some of them are programmable. For example, Ethereum, you can build applications on top of it. You can build anything that's online, you can build it on top of Ethereum. The reason why people like building on Ethereum is because the internet it started out kind of very decentralized, and it's really consolidated into a bunch of conglomerates, over time. And Ethereum and some of these other programmable blockchains brings everything back and kind of levels it out so there aren't any monopolies in the space. You have metaverse coins. So some of you probably own virtual reality helmets. There are coins and teams that exist that are building virtual reality worlds where these coins are used. You have exchange coins where, if you go and you buy Bitcoin or Ethereum or Binance coin or another coin, there's a transaction fee that the exchange charges that goes into sometimes a liquidity pool for a particular token, which that's how it discovers value. You have decentralized finance. So, we talked about the idea of a bank and brick and mortar and employees. Well, if you do a bank online, you don't have all that overhead. So you can give a lot better interest rate to your customers because you don't have all that overhead. And the interest rates on cryptocurrency are much higher than they are in the legacy world or what you get in your savings account. You have stable coins. So, for example, let's say you're holding Bitcoin and it jumps up to $65,000 and you think it's going to go back down. Well, then you would swap your Bitcoin for something along the lines of USDT or Tether or USDC, which acts like the dollar. It's always worth $1. And then if Bitcoin drops down, maybe you flop it back over and try to catch it when it's really low. So that's the idea of a stable coin. You have meme coins, not my favorite. They're highly volatile. Most of them don't really do anything. They'll just have kind of a picture of a funny looking dog on them or whatever. And a lot of people get into them and put their money in, and then as soon as people start taking their money out, they crash really hard. But there are some that are being developed and becoming programmable. And then you have governance coins. So governance tokens, and it's kind of one of my favorite things, is where coin holders have voting rights in the organization. So for example, there is something called decentralized autonomous organizations, and that's where there's no leader, there's really no manager. Your contribution to the network determines how many coins you get, and then the amount of coins that you have determines the amount of voting power that you have on proposals to the network. So those are the different types of coins. So why would you ever want to get into cryptocurrency? I think this is not investment advice, but this is what has happened to the major cryptocurrencies over the last 5 years, and the trend has continued. And as you can see on the bell curve, we're still very early into this. Now, that's not to say that some of these coins may not be in the top 10, top 15 in the next couple of years. There's going to be other coins that come out that do really well, that give 3,000, 4,000% returns. But as you can see, if you get into some of these projects very early, you can do extremely well. And I still don't think that it's too early for a lot of the top 10 coins because of the limited amount of saturation in the market right now. But also want to throw in there that if you are interested in getting into early stage coins, it is extremely risky. And your larger, more well-known coins, it's already a very volatile market. So getting into some of those very risky early stage coins, probably even riskier. So, all right. So how would you participate in crypto? The best thing about cryptocurrency is you don't need a broker. You don't need a bank. You can download most of these applications from your telephone, and you can, of course, use them on your browser, on your PC. These are the top 5 exchanges right now on CoinMarketCap, which also I've listed here as your best place to do research. CoinMarketCap shows you everything about a coin. If you hear about something, go to coinmarketcap.com, just type in the search. You'll be able to pull it up. You'll be able to see the socials, the Twitter, of course, candles. It'll look like stock market charts. But these are all great exchanges. I will tell you that all of them are American, except for KuCoin, which is the big KC. I just really like that exchange. It's located in Singapore. That's your high risk option. Coinbase is going to be more of your very well vetted coins that are usually in the top 100. And Binance is also very popular, along with Kraken and FTX. So now, as far as the slideshow presentation goes, I know sometimes the terminology that's used, especially if you're not familiar with it, is a bit much. I also wanted to mention that, at the beginning of the year, if you're in hello? Sorry. Thought I heard someone. If you're in Greensboro at the beginning of next year, I'll be offering some in-person classes through a company called Certified Investment Strategies, Inc. Right now, I do have a Facebook group, if you want to learn more, called Cryptocurrency Questions, Answers, and News. Everybody's very friendly there and very happy to take questions. It's a mixture of new people and kind of veterans in the space. Also have a local Greensboro nonprofit called the Gaia Coin Foundation, and we focus on environmental initiatives. So those are the things that I have, and I'm definitely open to questions. Thank you so much, Ryber and the SACC.